Today's conversation will be led by Andrew Haskins, Executive Director, Research Asia Colliers, and Sam Harvey-Jones, Managing Director, Occupier Services Asia Colliers, as they discuss prospects for office and logistics and industrial sectors across the region in light of a likely recovery. So over to you, Andrew and Sam.
Ladies and gentlemen, good morning. Thank you for joining us. Let's go straight into our first theme, China Plus One strategy. Sam, tell me, which sectors in particular are focusing on China Plus One strategies and in which markets?
Thanks, Andrew. That's obviously an increasingly important strategy that we're seeing across the region. What I would say is that China's got a huge domestic market and the high long-term growth prospects will continue to provide sufficient attraction for large multinationals. I don't think that's going to go away. But perhaps what we have seen, and maybe this is a result of the US-China trade war and the COVID-19 recession, that over the last few years, multinationals have realized that they cannot necessarily have all of their operations solely in China. And so what we're beginning to see is that some of those big industrial groups are looking to reshore a portion or part of their portfolios to have a supplementary presence in another country. But what are the benefits of this, Andrew? And I guess the benefits include risk mitigation, lower costs, access to new markets, and government-led incentives. And if we look at the different sectors that have really sort of started to adopt this, it really is primarily the IT groups and the electronic hardware producers. And in terms of the countries, I think from the developed markets, really it's Taiwan. And if you look at it more from an emerging market perspective, Vietnam, Thailand, and India at this time.
Thank you, Sam. And it's worth adding that Chinese enterprises may follow the multinational corporations. In recent years, Chinese capital has made significant investments in advanced manufacturing in particular. Elsewhere in Asia Pacific, markets like Singapore, India, Thailand have been beneficiaries of that investment. Looking ahead, based on current trends, the ASEAN +3 macro economic research office estimates that Chinese capital will invest $500 billion in that region between now and 2035. Now, from the perspective of property owners, given the emphasis among both multinationals and Chinese enterprises on advanced manufacturing, this implies that demand from occupiers for advanced manufacturing space will remain firm, and that firm demand should support industrial asset prices. Now, it's not quite so clear for the office sector. Demand linked to China Plus One strategies may support demand for office space in markets like Taiwan. Overall, however, given a significant imbalance in many markets between demand and supply, China Plus One strategies alone are unlikely to support office capital values. Move on to technology occupiers.
Thanks, Andrew. So, Andrew, I mean, look, if we ask the sort of the opening question here, why do we expect Chinese groups to lead the expansion of Asian technology occupiers?
Well, if you look at this slide, what you see is the combined actual stock market capitalization for listed companies or estimated valuation for unlisted companies of leading US and Chinese IT and internet groups as of December last year in billions of dollars. Of course, you see well-known multinational US names, Apple, Amazon, Alphabet, but look at the Chinese names: Tencent, Alibaba, ByteDance, Xiaomi, and in fact, the Chinese already represent 23% of this grouping. Now, this is just an indication of how important Chinese technology enterprises are becoming. From a property perspective, it's interesting to note that the leading Chinese technology groups currently occupy about 2 million square meters of space in the major Chinese cities, and that's equivalent to about 10% of grade A office space in those markets. So Sam, what does this Chinese expansion imply for, or technology expansion more generally, imply for office leasing demand across Asia Pacific?
I mean, Andrew, I think it just simply implies that the Asian technology tenants will continue to lead demand for office space across the region. They're going to help determine the rents, they're going to help determine the incentives and the deal structures. But let's be really clear here that the technology sector is already the dominant force behind a lot of the office leasing in the Asia Pacific region, and we just really expect that dominance to continue. By 2024, we feel that over 25% of leasing demand will come from this sector. I mean, in terms of the different occupiers and the sub-markets, I think we're just going to see a lot more of the same. I think if you look at those traditional sub-markets for technology, you're looking at Shenzhen Wei and Tanjong Piazza in Singapore. You're looking at the Outer Ring Road in Bangalore and High Tech Park in Shenzhen. I think one area that perhaps has changed just a little bit is perhaps the evolution and coming to the fore of the Australian cities in terms of being a tech hub. We're definitely seeing much more rivalry there from both a Sydney and a Melbourne perspective, and we see that these will become more important from a tech perspective, both from the rest of this year and into the future.
Thank you, Sam. And of course, the popularity of these markets and sub-markets with technology occupiers, that is to say, with the fastest growing business sector in Asia, should reinforce the popularity of many of these markets with property investors and developers. Colliers' recent global investor survey showed that the most popular investment destination in Asia Pacific was Sydney, followed by Melbourne, followed by Singapore. And if we just look at the largest commercial property segment, which is office, 55% of the respondents to our survey expressed a preference for offices in Sydney, 53% expressed a preference for offices in Melbourne, and 42% for offices in Singapore. Now let's just go forward to the next of our three themes: flexible workspace. Now, Sam, as the growth of technology hubs illustrates, within cities there is a debate about whether CBDs will retain their importance. To put it bluntly, could there be an exodus of occupiers to districts on the fringes? And if so, what does that imply for the future of CBDs?
Thanks, Andrew. I think this is the $1 million question, isn't it, really? I think we've continually heard over the last 6 to 12 months that, the evolution of the workplace is going to be the death of the CBD. Let's talk about some of the stats. I mean, let's look at it bit by bit here. I mean, the flexible workspace is 100% here to stay. We definitely know that occupiers, from the conversations we're having and from what we're seeing in the market, will continue to use flexible workspace for both short-term leases, expansion opportunities, and really at the moment it's to avoid any additional capital expenditure that they just do not have. If you look at the flexible workspace operators, they're tending to follow occupiers to off-CBD opportunities. But the interesting thing here, I think, is if you looked at places like Beijing, Seoul, Sydney, and some of the bigger Indian cities, they already have viable office districts on the fringes. So this isn't really anything new. But I don't think this really implies that there's going to be the end of the CBD or the death of the CBD, as we keep hearing. There's no doubt that CBDs will continue to be important. They are the center of activity. Their concentration of infrastructure, amenities, prime grade office buildings, and accessibility to a number of different transportation hubs suggests that the CBD will continue to thrive. Although, let's be honest, in the longer term, it may well take on a different role. So what is going to really happen? I think, while the flexible operators may follow occupiers out to the city fringes, what we will see, and we've seen this in other, economic downturns or after other economic downturns, is that flight to quality. Whereby the occupiers leave, and then that space is backfilled by people looking for better quality office buildings with better amenities. So I think this will just be a continuation of what we've seen before, and so you'll have both worlds living together. I think one of the things that will change within the CBDs is more of that sustainability, and that sort of wellness certified and sustainable buildings are becoming more and more attractive and more important to occupiers. And I think that is where we will see a lot more occupiers looking at the CBD, and the continuation of the CBD will be much more focused around sustainability into the future.
Now, Sam, if the interests of occupiers and flexible workspace operators start to become more aligned, could we see partnerships between them in the same way as people have been talking for some time now about partnerships between landlords and flexible workspace operators?
I mean, Andrew, again, I think as anyone who's read any of the Colliers research and any of the reports or talked to any of our people, I think you'll always see that we've always advocated that those partnerships between operators and asset owners, that we really feel they are very, very important. I think from a asset owner, the partnership provides an opportunity to give their tenants additional amenities. I think one of the key amenities we're seeing at the moment is just the use of swing space. And by swing space, I mean short-term accommodation while conventional space is being fitted out, or even in cases, and I guess increasingly more often, as an alternative to conventional space altogether. But I think what COVID-19 has taught us is that occupiers are looking for more and more flexibility in their lease terms, as well as the durations of their leases. I think from an occupier perspective, it's increasingly important to have the ability to walk away from a lease when times are hard. And I think it's very important that owners understand this need, and it's going to be a matter of something that's increasingly important to occupiers. And if they don't offer that, then I'm afraid tenants will consider alternatives. And I think a lot of this will just stay until the office market fully recovers. And at the moment, there's not a lot of clarity around occupiers in the future of the workplace. So they're going to want as much flexibility as possible. And the second part you asked me there was really around, will asset owners launch their own concepts? I think we can imagine this will happen. We've had a few conversations with asset owners around this, but I'd say it's a little bit too early to really understand what is going to happen in this space. But what I would say is that this flexibility will probably feed into what we're seeing and what we're calling the hybrid workspace model, which really is offering occupiers the opportunity to have a part conventional lease space, part flexibility. And I'm seeing, and I think a lot of our operators are saying that this is an increasingly important aspect for occupiers to provide that additional flexibility at this time.
Thank you. Now, talking of hybrid models and new models, we really, I think, move into our final theme, which is sustainability.
Which again is an extremely hot topic, Andrew. But if you're looking at this from your perspective, in which countries are furthest advanced on the road to net zero carbon emissions?
Well, if you take a look at this slide, you can see that governments in Asia Pacific are increasingly setting sustainability guidelines for the property and construction sectors, and governments are increasingly setting targets specifically for net zero emissions. This process has received a fillip from the election of President Biden in the United States, who's a strong believer in action over climate change. Now, as you see from this slide, some countries in this region have already set specific targets for carbon neutrality. New Zealand, South Korea, Japan, the target year is 2050. China under President Xi has set itself a target of 2060. That may seem a long way out, but it's the first time that China has committed itself to a specific target. Australia is an interesting omission, perhaps, from this slide. The country doesn't have a specific target yet, but it's under pressure to set one, given that it's a very major producer of coal and gas, and Australia is looking like 2050. Now, with government setting targets, the property developers will come under increasing pressure, we think, to pay attention to sustainability. You will start to see ESG, environmental, social and governance considerations spreading more actively within the sector. But it's also worth saying developers may not just come under pressure from governments, but also from their customers, from occupiers. And perhaps companies are actually moving faster than countries in this regard. 23% of global Fortune 500 companies have set 2030 as a target year for carbon neutrality, although the proportion is lower here in Asia Pacific. And I suppose, Sam, that leads on to the question, How soon do you think it will be before large occupiers draw up specific plans for attaining carbon neutrality? And will they be willing to pay a rental premium for more sustainable buildings?
Thanks, Andrew. Let me break that down into the two parts as you've asked that. I mean, I think as you've just highlighted there, 23% of Fortune 500 companies have pledged to be carbon neutral by 2030. So we know that this is an increasingly important area that occupiers are looking at, and that's no different from the types of conversation we're currently having with our clients. A lot of them are coming to us and asking us, can we have a chat with landlords to really understand some of the steps that those landlords are taking, to really to facilitate some of those, for those more sustainable changes. I mean, I think it's quite interesting to see what those requested changes are. I think what we're seeing is improvement in energy, or improvement of energy and water efficiency. The maintenance and upgrading of heating, the ventilation and air conditioning systems, and the implementation of technology to monitor and improve operating efficiency. This really is changing on a daily basis, but again, I can see this as being an absolute key area for occupiers, for the rest of this year, as they move towards carbon neutrality over the years to come. But what does it really mean in terms of a green premium or a rental increase? I think it's a little bit too early to see what it means. I think what we will see is that the green certification will come into the newer prime grade properties, and such they probably will command a premium rent. But as I say, too early for us to really see. What we will know over time is more and more occupiers start to implement these plans, achieving carbon neutrality. It will be a lot easier for us to really understand what is that green premium, if anything. And obviously we'll keep people updated the more information we get. So I think to sum up our key message today, I think from the perspective of occupiers in the markets, it really is the technology sector will continue to dominate. That flexible workspace is here to stay, and that large occupiers will require an action plan for carbon neutrality.
Yes, and from the perspective of property owners, I think the key messages are industrial asset prices should stay very firm. There will continue to be a strong investment preference for key technology locations. Tenants will continue to demand more flexible leases, and landlords have to be ready for that. And finally, investment in sustainability should eventually pay off. Thank you very much for joining us, everyone. If you have any questions, please contact us.
Thank you, Sam and Andrew, and thank you all for joining us. As mentioned, this webinar was recorded and will be available on our website. We hope you enjoy the conversation, and if you have any questions, please reach out to us. Have a lovely day, everyone.